Hi, everyone. Welcome. Thanks for joining us today. This is the ARC of Fort Bend County's Parent Education and Support Group meeting. My name is Carrie Axtell, and I am the Advocacy and Youth Programs Director here at the ARC of Fort Bend County. We are a nonprofit organization dedicated to grassroots advocacy, family support, and we also provide a variety of social and recreational programs for youth, teens, all the way into adulthood for people with intellectual and developmental disabilities. If you'd like to learn more about us, encourage you to reach out to our website, arcoffortbend.org, and also follow us on our social media, our Facebook and Instagram. If you do have any questions during the presentation, if you'd like to either drop them in the chat box, we'll be monitoring that. Otherwise, if you would hold some of your questions till the end, our presenters will be happy to answer some of those questions that you have. Today, we're very pleased to welcome both representatives from the uh, Special Needs Solutions for Special Needs Families, Amy Lewis, who is the Government and Benefits Specialist, and then also from Strategic Yami and Yami Fernandez and Brian Smith with Strategic Financial to also talk about how to navigate government benefits and special care. So thank you all for being here today. This is a very robust topic, so I know we're going to tackle a lot today. So thank you all for being here.
Thank you.
Thank you, guys. We'll go ahead and start. My name is Brian Smith. As Carrie was saying, I'm a chartered special needs consultant. My junior planner, Yami, and then Amy, our government benefits specialist. She's out of Austin. We're out of Houston. We work with only families that are like ours, so loved ones with special needs. Yami and I are both siblings. So a lot of the planning that we do, the questions that we ask, it always comes from that lens, right? What do we need to be doing for the end and prepare for today? What's the impact to the next line caretaker, the sibling, obviously the child with special needs? And that's how we think of planning. So today we're going to talk about 10 basic steps. So what are some conversations that you should be having? What are some topics that, depending on the age of your young adult or child with special needs, that you should have already had or be doing currently? And then ultimately, we'll talk high level of what's going on with the latest legislation that was passed earlier this year in July, and the impacts to Medicaid. There's a lot of things that we don't know. There's a lot of things that we do know. And so we'll just kind of tell you what's the current status, what we're being told. And that's literally changing month by month as things shake out. States had 7 months to get in compliance with the rule. That was in July, so we're still in this like weird window here. So it's going to be interesting to see what happens. So let's go ahead and jump into it. So the first step, you can skip this one, two, yeah. So the question that we always begin with is essentially what happens when you're not around. Too often, what we see is families, moms and dads do everything for the young adult with special needs. And that's fine. There's nothing wrong with that. The problem comes when you don't articulate what you do on a day-to-day basis for the next in line person, right? And that's where we ask this, what happens when you're not around? Who's in charge of doctor's visits? Who's in charge of social recreational activities? If you go to the next slide, can I control it, or it's possible if I can control?
I did make you a co-host, Brian, if you'd like.
Yeah, I would love that. Just so it's easier. I can because I will have to flip between slides once we get to the meat of the stuff. Um, but when we ask and we talk about what happens when you're not around, it's not just where is the child or where is the young adult going to be living. It's going to be everything. Do I need to share my screen?
Yes, because that's how
Yes.
you can control it.
Oh, I didn't know if you just gave me remote control. Sorry. Let's get back on track here.
There you go.
Okay. So here's the topics, right? Medical treatments, education goals and opportunities, whether it's continuing school past 18 in the public school system, if it's going to a modified curriculum course like PATH or VAST or CLE out in Austin, like what are the goals that we have? Skill development, employment. Just because we intend or want to receive support from government benefits doesn't mean that we're not able to be employed or be gainfully employed here. Um, Housing's a big one. Transportation's also a big one. Who's going to be driving the young adult around? Can they drive on their own? Who's going to cover those expenses? For me as a sibling, social and recreational is a big one, right? We don't want our young adult with special needs to be alone. If mom and dad removes themselves from the situation, we don't want that young adult to just be playing video games on the couch, which is something that we hear often. We want them to be involved. We want them to be either having social stuff, working, day hab, those types of things. And that's what we focus on there. So once we kind of start formulating these ideas, these goals, what the vision is going to be in the future, we start with what's the first action item to protect the plan that we're about to create. In our practice, we say Medicaid is king, meaning that the Medicaid benefit we apply for and we get, that is the most important benefit 99% of the time for young adults with special needs, now and in the future. And so we have to protect that benefit. There is a disability test, meaning that Social Security has to deem the young adult to have a recognized disability. And there's a financial test to that. And the financial test is $2,000 at an asset level, no more than $2,000. So one of the fastest ways that we can mess that up is a parent or a grandparent or an aunt and uncle accidentally passing away, and more than $2,000 gets left behind. Like grandparents are notorious for leaving a grandchild the same amount to all lines of the family members. So protecting that benefit by making sure that we do not have, like, for example, my brother James, we do not have James as the outright beneficiary. We have his supplemental needs trust as the beneficiary, and we'll talk about that here in a second. So reviewing beneficiary designations are important, like IRAs, 401k or 401ks, investment accounts, life insurances. We'll talk about this more in detail, but just because your will says one thing doesn't mean that those policies are going to flow that way if they're not designated correctly. So it's important to make sure that you align your legal documents and your beneficiary designations on your account accordingly. So the next is when we start this process and on an ongoing basis, what we call the fire drill is the family meeting, right? So two important questions we ask at this meeting is, are you willing and are you able to step in if the mom and or dad are no longer here? So willing is one thing. Are you able to is a whole different type of question. A lot of people might be willing to, but are they truly able to? Able doesn't necessarily mean, do they have their head on their shoulders, right? It's also, do they live close by? Do they have any experience with taking care of an individual with special needs? Are they equipped to make financial, medical decisions, apply for benefits, and those types of things? Or do they need support? And if they need support, that's what we're here for. That's what Amy and her team are here for, is to build out this team so that we can spread out the responsibility of the future. Part of this is being open to having individuals say no, having individuals say, I can do this, but I need help. And then also knowing that your plan today very well is going to change in the future. People are going to age. Health events in their life are going to change. Siblings. My life changed a year and a half ago when I had a kid. I'm still willing and able to step in for my mom. But during that 6 months when we're in the trenches and we're not getting a lot of sleep, probably wasn't the best time for me to be the go-to person. Tim was going to step in, my youngest brother. So we have this ongoing conversation because as the young adult's life changes, we have to change our plan to support that young adult with special needs. And we do this on an annual basis, and we get feedback from the caretakers. Usually, it's like, "Oh, I'm cool with it, no problem." Then, as as the years progress and we get deeper into the weeds, it's, "Hey, how do I pick the specialist for this individual? how do I get money out of this trust? And that's when we start getting granular and supporting that caretaker. So it's extremely important to have this meeting. Don't just assume. Don't just put the responsibility on the siblings to step up. Ask for feedback from them too, because they have a life and they have a future as well. Creating that team is important. My big takeaways here, don't just hire any attorney. Um, don't just interview just one attorney. Interview a couple of attorneys. You shouldn't be using a real estate attorney to draft a supplemental needs trust, right? You don't go see a foot doctor if you had a heart attack. Same thing with the CPA, working with a tax advisor that understands medical deductions, that understands the tax savers credit and able accounts, understands all these different things. We only work with families that have loved ones with special needs. So if family walks in the door and they don't have a loved one with special needs, we kind of refer those families to advisors in our office or other advisors outside our office. This is our specialty. We only get one shot at doing this right and working with the right professionals in those vertical niches is extremely important. If you need referrals to attorneys, to CPAs, we can help you. We've got really good relationships with a lot of them, not just in Houston, but across the country. Let's get into the meat and the potatoes. And this is where, like, take yourself off of mute, throw questions in the chat. I don't care. Step 6, step 7. This is where a lot of information is coming from. And this is where I think you guys will take a lot out. So first and foremost, government benefits. That is the engine to every plan. If you do not truly understand your child's government benefits, you can't say we're fully optimizing what's available. And so this is where I say families work with the right professionals. Don't always just go onto a support page or Google or Facebook. Like you really, every child has different needs. There's various benefits to support those needs here. What I'll say is this is on this page, there's 2 groups. You have your entitlement benefits on the left, and you have your means tested public assistance benefits on the right. They are both not Social Security benefits. They are overseen by the Social Security Administration and local agencies, but they are not all blanket Social Security benefits. Okay, so there's a big difference. The benefits on the right, the means tested benefits, SSI stands for Supplemental Security Income, not Social Security income, Supplemental Security Income. With that comes Medicaid. Again, the most important benefit for an individual with special needs. The qualifications for SSI and Medicaid are income thresholds, which we'll talk about, asset thresholds, which we'll talk about, in that individual's name after 18, and then having a recognized disability. How do you know if you have a recognized disability? If you Google Social Security Blue Book, that lists all the different disabilities and the qualifications to have Social Security recognize your child's situation. That's what we specialize in making arguments for. On the left is entitlement benefits. These are benefits that if the disability occurred prior to the age of 22, your child is entitled to receive a Social Security benefit on your behalf. Okay, 2 different ways. There's no asset testing on the left. There's only earned income testing on the left. Okay. This is a timeline to think of when we work with families that have loved ones with special needs. Individual is born to the individual is 18. To receive SSI and Medicaid, they're going to look at the parent's assets and income. Most of the time, this is where individuals get disqualified to receive Medicaid prior to 18. There is one way around that in a typical situation, and it's Medicaid waivers, right? If your young adult gets called on class, HCS, MDCP, Texas Home Living, deaf-blind, multiple disabilities waivers, there's 7 of them in Texas, then your child or young adult in that situation would receive Medicaid, a form of Medicaid prior to 18. At 18, our advice is always to apply. Never to delay, always apply. Right now, if your child is applying or receiving SSI, the max amount of SSI is $967 a month. That's going to go up to $994. With that comes Medicaid. What ends up happening is when the mom, I'm going to use mom for example, and I'm going to use $4,000 as a round number. Mom goes into Social Security, 67, raises her hand and says, "Hey, I'm ready to receive my benefit. By the way, I have a son, special needs. You guys have been paying him SSI and Medicaid for all these years. Here's his name, date of birth, Social Security number. They'll make sure he still qualifies as being disabled. Mom gets 4,000, son gets up to $2,000. So there's the RSDI benefit is a benefit, an entitlement benefit that young adult can receive up to 50% of that parent's full retirement age Social Security benefit. Right? So that's a second increase. First one happens at 18, SSI turns on. Second one happens when mom retires. Third one happens when mom passes away in the future. That benefit goes from 50 to up to 75% of mom's full retirement age benefit when mom passes away. It's important to know this because one, you're not starting from zero. Two, when we do a needs analysis, we take into consideration these benefits to know how much to lead to a special needs trust. It's also very important if you aren't working with anyone and you're interested in working with people, when you interview attorneys, when you interview CPAs, when you interview advisors, ask them the differences between SSI and RSDI, the qualifications, the rules, because these benefits are extremely important for your son or your daughter's future. Okay. Any questions here on timeline, incomes, when they turn on, anything here? Any?
Hi, Brian. I have a question just about, so the distinction between when the parents retires and starts receiving their Social Security benefits and then parents passing, on the income limits, you have young adults income. You said unearned is no limit and earned is the 1,600. So that's if the young adult themselves has a job, they can earn up to that 1,600 a month right now.
Correct. So that's a really in the weeds catch there. This opens a whole can of worms. So let me answer this as best as I can. Remember in the beginning, I said these benefits are two groups of benefits, right? So one group, the entitlement benefit, there is no unearned income test on RSDI. There's only an earned income test, right? So, Carrie, you and I, if we get injured and we file for SSDI, Social Security will say, "Do you have a disability? And do you earn more than $1,620? We can have $100 million in our name, but if we get injured, we qualify because we have a disability and we don't have an earned income over a certain threshold. When they don't care about unearned, you have a pension, you have VA benefits, you get all that. They don't care about that because you're not working for that. But Medicaid does. So when you're doing planning, you don't default to, well, I should get the parents' RSDI amount. I don't have to worry about unearned income. No, no, no. Medicaid is king. So you always fall back to what are the rules to maintain Medicaid? Because if I can maintain Medicaid, I can also maintain the RSDI portion. Okay.
All right. Thank you for that clarification. I know there's some more questions there in the chat.
The child can get up to 50% of my SS retirement. How to decide the exact percentage? So Anna, there's on your Social Security statement, you have your blue chart on the right, shows you your benefits from 62 to 70. On the left side, there's some wording, and it usually says your retirement benefits, your disability benefits, your survivor benefit, and then the very last part of that section, the last number you see is called your family maximum. It depends on how many people are claiming off of your benefit or your husband's benefit or anyone's benefit. So there's a family maximum that says everyone in the household, if they were to go on this one person's benefit, spousal benefit, Social Security retirement benefit, and RSDI benefit, this is the max we'll pay. So single parent, child, you're going to get your full retirement age benefit and 50% of that. If there's a non-working spouse and an RSDI person and an individual receiving retirement, you might get 48% or 47%, not necessarily 50. So it all depends on what that family maximum is. Every single person's family maximum is different because everyone earns different amount of income and pays into Social Security differently. And then Grace, can we get this slide? Yeah, if you want to reach out to us directly, we can get you the slide for you.
I will say that I believe Yami's going to share this with me as well. Everybody who registered for this event, I will send you first the recording of this actual presentation and then the materials that she sends as well. I did have another question in the chat about it was sent to me. Question is, how many work credits that an adult with special needs need to earn in order to be qualified for their own SSDI?
So their own SSDI depends on their age and how long they work. So like for us, Carrie, myself, Amy, Yami, we have to work 10 years.
Okay.
For individuals that are trying at 18 and they try for a year and a half, 2 years, they look at there's a formula, and I don't memorize the formula. There's a reduced timetable because obviously they can't expect someone who claims SSDI at 20 to work 10 years because you can't work at 10 years old. So there's a reduced timetable of if you have so many quarters at certain ages, I think it's all the way to 26 or 28, then you would qualify for an SSDI benefit. So it just depends. If your child gets an SSDI benefit or works themselves off of the RSDI benefit, there is an opportunity for them to lose that 50% or 75%. If they marry someone who doesn't have a disability, if they work themselves off of and get their SSDI benefit, there is an opportunity there to potentially lose a bigger benefit. My son receives SSI and survivor's benefit. If he wants to try a part-time job, will they do the one deduction for every $2 earned from the survivors? Then they still have to stay under the income threshold for Medicaid. So yes, except in your question, when you say, will they do a $1 deduction for every $2 earned? That's not for the survivor's benefit. That's for the SSI benefit. And if you lose SSI, you lose Medicaid. Unless you lose SSI because of the survivor's benefit. So this is a very unique situation where if you got Medicaid before getting an RSDI benefit, because Texas is a 1634 state, you don't lose Medicaid. You'll lose SSI. If your child received survivor's benefit before applying for SSI and Medicaid, they'll count that as unearned income. So like the really unfortunate situations, not only is it bad when a young adult with special needs loses a parent as a minor, but it's also bad for government benefits perspective because now that income is considered unearned income. And that's where it comes into an issue.
So what would they do? Put it to a trust, I guess, or I mean,
No, that
no.
income is irrevocably assigned to that individual. So even if you throw it into a first party trust, it's still counted as a income as a resource. The only other way to get Medicaid in that situation, depending on the amount of the RCI, again, a lot of this I can talk high level. Every case is different. So reach out, ask me specifics, I'll be able to answer. But it all depends on the amount of the RSDI survivor's benefit and can we get Medicaid through one of the waiver programs, which has a higher income threshold? If we can't, which this happens sometimes, they don't qualify for Medicaid.
There was a second part to the question that I asked earlier. So for the adult with special needs, are they allowed, if they have earned their own SSDI or qualified for their own SSDI, and later on, the adult with special needs, are they allowed to switch to the RSDI based on the parent's work credit when the parent starts for withdrawing their Social Security?
Amy, if you want to chime in here, my answer is they don't get to choose the switch. Social Security will run the analysis.
Correct. And they'll do that because that's kind of like in between of each one. They'll let you know exactly if they're going to have. Remember, Brian had said something about them working too much and then they can work off that work record as far as the parents' work record. They do that analysis. Um, I also see another question about the employment income of a child or adult child decrease SSI. One of the things that's really important is that they tell you when you do get your benefit that you must report those wages by the 10th of every month. The reason they do that is because if you do not, they will estimate that amount. And when they estimate that amount, they usually do it on the higher side. So you all of a sudden will see a depletion of your SSI of earned income, which is wages, and basically, those things, if you don't want them to estimate. So, if you are receiving benefits right now, make sure you do fill out a ssa.gov, go there and get on there, register for that, because you can report wages and certain benefits on that ssa.gov to make it easier for you to report those wages by the 10th. And that way, they get the exact amount and it goes off of that SSI amount and not a higher estimate.
Is there,
Yes, I'm sorry. Hi, Brian. Can
guys?
I? I'm not quite sure. Yeah, I want a little bit more clarification for the question Carrie just asked. Like, uh, let me say it this way. The child he earned enough work credit for himself, so
Mhm.
he can claim the SSDI, and then the parent pass when the parent starting collecting the parent's own social security at that time, the child, since parents' work credit is higher than the kids, so can you mentioned the child is not allowed to choose to which whose work credit they can use to collecting the RSDI. So does that mean is that still possible? The kids can claim his RSDI based on parents' credit.
If you work yourself off of the RSDI,
Yes.
you can't get back. You can't get back on the RSDI if you work yourself off of.
Oh, so if the child claim work for claim SSDI, even the parents when the parent retire, the child cannot switch to use based on parents' work credit to do RSDI, right?
So, what I would do, Grace,
Yes,
is I would, if they're receiving SSDI now,
yes.
I would go into your local SSA, whoever you're, based on your zip code, who you report to, your local SSA, go in there,
Mhm.
have them look at the SSDI benefit and then say, hey, by the way, we are going to be retiring, then they can look at that to see if there's too many work credits, if they've worked themselves to disconnect from your work record, then they can look at that. Especially if you can't read your statement and you don't understand the statement. And then if they do, then they can look at that as well because it's going to be based on the higher benefit.
Okay. Will you be able to send me some like resource about this so I can read through it? Because I still get confused. I'm so sorry.
Yes. And what I said is, you'll get my information, and I can send you um, the information, and then you can give me your zip code, and I can give you the local office that you need to go into.
Okay, thank you, Amy, and
Okay.
thank you, Brian.
Yeah, absolutely. Um, so just moving on real quick to here. These are how we classify, or how not we, Social Security classifies for SSI Medicaid unearned and earned income. So unearned income is on the left. Title II benefits is RSDI, SSDI benefits. VA benefits, assets or gifts, child support after the age of 18 is considered an unearned income. If you receive or your young adult receives child support after 18, it has to go by court ordered to a first party trust. If that happens, then it is not counted against SSI for resource testing. Okay. So please, if you get child support after 18, which if you have a young adult with special needs, you absolutely should get child support after 18. It just has to go to a first party trust. Survivors pension. So like here in Texas, we have a lot of teachers, TRS, ERS, TMRS, firefighters, police departments, survivors benefits. That's considered unearned income if it's paid to the kid. And then annuity payments. Like if you get an income stream and you leave your child as an annuity income beneficiary. Earned income is shelter in lieu of wages. So that would, essentially be living at home instead of paying them, and then wages themselves, right? So they work, they earn a paycheck, they have a W-2, 1099. That would be wages that Social Security would consider earned income. That's pretty much most of the income streams that I can think of that are pertaining here specifically. If you apply for SSI Medicaid and you're not getting the 967 that I talked about a few slides ago, and you're getting like 650, 660, it's because your young adult is not paying rent or paying their fair share to live at home. So in order to do that, you have to establish a rental contract or establish a fair share agreement with your young adult with special needs. The minimum amount to do that that you have to pay yourself is about $400. If you establish that, prove that with bank statements, showing all of that, then you will submit that Social Security and you can get that increased. We do this for clients all the time. If you need assistance with that, reach out. But that is why you're not getting the full amount. This is really important when it goes to applying, to do it before applying for SSI and Medicaid so that you get all this back pay money. It's at the 967 and not 650. That's about over $3,600 a year. So it's important to think about there. These are different ways that you can max out the SSI in terms of utilizing an ABLE account or a bank account. You can deposit SSI account money into ABLE accounts. You can't do this with Texas ABLE accounts. You can do this with other states' ABLE accounts. SSI directly into the ABLE account, pay yourself rent, that $400, and then use the other funds for food and everything else for your young adult. You can deposit it into a representative payee account, which is just a bank account at Chase, Wells Fargo, whatever, with the rep payee designation. Move it to the ABLE account, pay yourself rent, and then use the ABLE account for other expenses. Or obviously you can use the rep payee account for rent and expenses, other daily needs. And if there's leftover amount that we get close to that $2,000 threshold, we can move that into the ABLE account as well. So there's a lot of different ways. It's not just one way that makes the most sense for each family. There's a lot of different ways depending on the access of money, the expenses that we have on a monthly basis, what we want to leave behind in the ABLE account. There's a lot of conversations to have here, but there are 3 ways of doing it high level.
Brian, I have a question. So you mentioned that for the ABLE account, like for example, option 1, that it can't necessarily be a Texas ABLE account, but it can be another state's ABLE account. Is there a certain
Texas ABLE account doesn't have banking.
Okay.
So it doesn't have like a checking and routing number for Social Security to directly deposit.
Okay.
But like certain states like California, Maryland, they do. So you can directly deposit SSI into those accounts.
Okay. So for families who already have a Texas ABLE account, would they then do maybe something like option 2, where it's goes to a rep payee account, so you have that option of a checking routing number for monthly expenses, and then balance goes to an ABLE account?
Yeah,
in Texas.
If you have a Texas Able account, option 2 and 3 would be the options that you would have to choose from. That's correct.
Thank you.
Yeah, absolutely. Able accounts are really, really useful. I think every family should have one at some point in their lives. It just depends on when and how we're going to use them appropriately. This is just kind of a snippet on DAC designation, so disabled adult child. Again, if the disability happened prior to the age of 22, your child will have that that designation. Texas is a 1634C state, which just means is, like I said, if your child, young adult, receives Medicaid at 18, 15 years later, that RSDI benefit kicks on, they won't lose Medicaid because of that, because they force him or her to switch over to that RSDI benefit. You know, kind of to Grace's question, can you choose? There's very little, about the only thing you can choose when it comes to Medicaid, SSI, RSDI, Medicare is what provider you're going to have for Medicaid. When it comes to the amounts, when it comes to what income benefit you're going to get, they're going to tell you. You don't get to choose a lesser amount or a different one just because. They're going to say, here's your option, take it or leave it. And so in this situation, you always switch over to the RSDI benefit if it's higher. And that could cause issues, but there's ways around that. 1634 state, we're okay there. You'll get a nasty, nasty letter in the mail, but don't stress about it. There's ways to get it turned back on. The reason why you get a nasty letter, and it's silly, Texas Health and Human Services, they don't have like an open line of communication with Social Security. So all they see is a number coming in and they go, oh, this must be wrong. We're going to kick you off Medicaid. Instead of calling Social Security going, hey, is this an RSDI benefit? Okay, never mind. It's crazy. It happens all the time, but it's because they don't talk to each other. But you're a 1634 state, so you'll be okay. Legal structure. If you have a young adult with special needs, you need a special needs trust. I've been doing this for 10 years. I have not found a reason to not use a special needs trust. Unless your young adult is making $4,000 to $5,000 a month, has sustained employment for longer than 5 years, and has proven that we don't need Medicaid, you need a special needs trust. Don't find reasons to cut corners, because when you cut corners, that causes issues for us and the young adult with special needs, meaning us, meaning siblings. Everyone should have a will. Everyone needs to dictate how their assets, like their home and their cars and their jewelry, any antiques, hand-me-downs, those types of things, how that's going to flow. But you need a special needs trust. Titling of your beneficiaries is extremely crucial. We talked about that in step 2. We're talking about that again. If you want assets to go to the special needs trust, direct those assets via will and beneficiary designations to the SNT. My mom does not have James listed as a beneficiary. James Smith's Supplemental Needs Trust is the beneficiary of those assets. So the money will go there. There's no asset limit on how much you can leave behind to a third-party trust. I'll go back to this slide here in a second. I can have a third-party trust for James. My mom can have a third-party trust for James. Yami can create a third-party trust for James if she wants to. There's a lot of flexibility there. One of the big benefits of third-party trusts, there's no Medicaid payback provision there. Right? So if you have siblings, you have other kids, you have other family members, you would benefit when that young adult 50, 60, 70 years from now passes away. Third-party trusts allow that flexibility. First-party trusts have a Medicaid payback provision. What's the difference? First-party trust, the only person that can put money into a first-party trust is that adult, young adult with special needs. Not you, not mom, not grandma, not aunt, uncle, cousin, brother, sister, doesn't matter. The only person that can put money into a first-party trust is the individual with special needs. Third-party trust, any and everyone. Okay? When you work with a elder law or attorney that understands special needs planning, you go in there and you say, I want a special needs trust. They know you need a third-party trust. You go in there and you talk to your real estate best friend who's going to draft you a trust. They don't know the difference. And we've seen that happen a lot where the languages get switched. And that's an issue, not just for Medicaid and SSI, but that's an issue for Medicaid payback in the future. So use the right attorneys, use the right estate plan. This is what your child's estate plan will look like. They'll have a rep payee account where only SSI or RSDI and earned income goes into. Your money will never go in there. No one's money will ever go in there. Future brothers and sisters, caretakers' money will never go in there. Only the individual with special needs. That is their bank account. The second account they're going to have is an ABLE account. Think of that as checking account number 2. So we deplete the rep payee account, then we deplete the ABLE account. The third-party special needs trust is where you leave behind your money for your son or your daughter. That's where you'll leave it. It's a savings account. It's an investment account. It is a way to leave more than $2,000 behind and it not get counted against Medicaid testing. You can leave $100 million if you want to. It can all go to the trust. It's protected. That third-party special needs trust can only be used for that individual with special needs. It can't be used for other family members. It can't be used for brother and sister that need college funding. It can only be used for the individual with special needs. Okay? So it's really, really important to understand that, the rules around that. But this is what this is what every individual with special needs estate plan should look like. No excuses, no nothing. Why? The rep payee account is super duper flexible for siblings like me to pay for expenses for my brother. It's a debit card. It's a checking book. I can write checks out of that really easy. The ABLE account allows us to have more than $2,000 in his name and still have the ease of getting money out same day, swiping cards, writing checks. The third-party trust allows me to save money for his future. You don't pay your electricity out of your savings account. You don't pay your rent out of your savings account. You pay that out of your checking account. This is the same thing here. Rep payee ABLE account, think of that mentally as checking accounts, the special needs trust, long-term savings accounts. Okay? Any questions here on this or just trusts in general? Try to get through because I know we have some time at the end for questions, but also the OBBB stuff. Guardianship is another very important topic. I don't spend a lot of time on this because this is where the attorneys really make their dollar, not just because of the cost with guardianship, but because of the importance of guardianship. It is not an all or nothing, right? You don't have to say, do I need guardianship or do I not? There's levels to guardianship. There's alternatives to guardianship. There's supported decision-making, power of attorney, guardianship with the persons, guardianship with the estate. There's a lot of variability here. Every single young adult has different needs. Every single young adult makes different decisions. Do not just listen to your neighbor that son's in the same classroom and say, oh, well, they got full guardianship, therefore my son or daughter needs full guardianship. That is not the case. You need to think this through. I would say start this process at about 17 and a half years old. Work with an attorney. Your child will get an attorney ad litem. You get served. It's a whole process. It's not very quick, but you need to think about that because it's important. At 18, they are an adult. And you need to be able to still make decisions if that's important, or you need to be able to support their decisions, medical and financial as well. Very, very, very important. Like one of the craziest ones that we have is he luckily just got approved a couple of weeks ago, but he would just open credit cards. Like that was his thing. And that was a massive issue for Social Security. So we had to lock that down. Because he was like, oh, it's free money. It's not free money. It's not free money. So those are certain things. Every individual is different. If there's certain things that are scary, like medically, they don't really take care of themselves, we probably need to put some protection around that. Financially, they're very susceptible to being taken advantage of. Probably want to put some protection around that. So just think of your child if you weren't there. That's the type of guardianship that you need. Letter of intent is super important. It is not a legal document, but it is a very important document. This is where we talk about where the assets are beneficiary. We talk about who has the special needs trust. We talk about who the trustee is, their Medicaid number, their caseworker, their Medicaid waiver provider. All of everything on a day-to-day basis is documented in this file, right? And so when something happens to mom and dad, we can pick this up and keep on going and not have a drop in lifestyle for your young adult. It is a pretty long document, right? It is not something that I tell families to knock it out on a weekend. Usually we give our families about a year or two to knock it out because it's not that you can't knock it out in a weekend, but it's like those small day-to-day annual routines that you go, oh, I need to probably put that in there. They really like doing this for their birthday. They really like doing this at the start of school, whatever. They want to do this annual trip. We need to document that because if you have siblings or children that live in California or New York or Florida or somewhere else, and they're not here on a day-to-day basis, and they're expected to have some responsibility in the future, this is where they go, okay, what was mom and dad doing? Like, what am I supposed to be doing for my brother and my sister? This is where we get all that information. This is where we kind of center the fire drill around. We bring this up, we review it, we make sure everything's good, up to date, numbers, addresses, everything. Extremely important. We have copies if you need a copy. Reach out to us, and we can just send it to you to work on for your family. It's really important stuff. This is a meme that not a lot of people get, but I'll explain it to you, and it's kind of like this. When we talk about OBBB and we talk about adult services, Texas is second to last in the United States. We are the bottom of the barrel for services for young adults with special needs. We live in a great state. There's a lot of good things about it. But when it comes to the waiver programs and the waiting list, we're really far behind the 8 ball. If you don't know what a Medicaid waiver program is, reach out. We will give you the contacts to put your child on the waiting list. That is the most important thing you can do today. If you don't have your young adult on that list, put them on the list and you'll feel a lot better. 15 to 20-year waiting list for some of these programs. And these programs were the ones that are going to be the most affected by what happened in July. So in July, the One Big Beautiful Bill was enacted, and it was one of the greatest attacks on Medicaid from a state level that we've seen. So what we know is this, and this is specifically for families that have young adults with special needs. One, Medicaid is not going away. What Medicaid provides, base Medicaid, so not Medicaid waivers, but Medicaid, hospitalization, emergency surgeries, medications, x-rays, like base Medicaid has not changed. Eligibility for individuals with disabilities has not changed. They have not changed the definition of disability for Medicaid or for any SSI Medicaid benefit. That has not changed. So where did the attack come from, or where did all this headline of Medicaid, spending over the next 10 years, $916 billion is being slashed? That is the state-ran Medicaid waiver programs. Every single state has different waiver programs. Texas has 7. If you move to Louisiana or Oklahoma, New Mexico, you're not going to have the same waiver programs, even though it's 600 miles to the east or west of here. Every state has these enhancements or these additional services called the waivers, right? If you have Medicaid at 18, you do not get respite. You do not get host home companion. You get those services through CLASS or HCS. Those are waiver programs. And that's where the attack came from a funding level. What's happening is the national government is slashing what they're reimbursing the individual states for. If you were to ask me June 1st, 2025, Brian, Texas is second to last. This state is not where I want to grow my family long term. I need to go somewhere more beneficial. Where would you go? I'd say go to California, go to Oregon, Washington, New Jersey, Massachusetts. Those states are a lot better. The waiting list a lot smaller. more services, more money. Texas, the reason why is one, our fundings have been frozen for the waivers for new additions since 2005. Second, Texas is not a Medicaid expansion state. We did not participate in that. Those other states did. So June 1st of this year, they're gravy. July 8th of this year, they're up a creek without a paddle. The state of Oregon is anticipating over the next 10 years a $15 billion hole on what they currently provide to families. What does that mean for families in Oregon, and what does that potentially mean for families in Texas? Well, your first thought would be, well, just raise taxes or increase the taxation for Medicaid. That's where the OBBB is being sued by the states. States cannot increase taxation to fund the loss in Medicaid services. The states cannot create new Medicaid tax provider taxes to fund those services. So what does that mean for states is they have to go to their general fund to figure out how to fund Medicaid services. What does that mean in Texas? Relative to those great states like Oregon and California, Massachusetts, New Jersey, Washington, we're not going to feel the effect as bad, right? If you look at your floor where your feet are right now, think of Texas 1 inch off the ground. We don't have that much far to drop. Oregon's 3 feet off the ground. They have a lot more to drop. So what I'm telling families in Texas is we're going to feel the effects because Texas's reimbursement is not going to be as much, but it's not going to be as impactful as other states. I still think that we're going to feel some things shake out. What do I think it's going to look like? Hours might be slashed. Some support services might change, but I don't think HCS is going away. I don't think class is going to go away. Or MDCP. They're still going to be around, at least for now that we're being told. What is going to change here in Texas is HCS is considered an HCBS waiver program. It is meant for individuals that could be institutionalized, that are not institutionalized, living in the community or at home. This new waiver that they're trying to get states to create is for individuals who don't meet that institutional level, right? So HCS, there's a hard line in the sand. 69 or below an IQ or 70 to 75 full-scale IQ with a disability. If your son or your daughter has an 82 IQ, they do not qualify for HCS. So this new waiver is supposed to support individuals that are right outside those barriers right now, and hopefully, ideally, shrink the waiting time for HCS and other services or other waiver programs. I love Texas. I was born and raised here. I'm raising my own family here. My brother with special needs is going to live here for the rest of his life. I know I feel like I'm just kind of pooping on Texas, but I'm telling this from a professional standpoint, from a personal standpoint. I don't think Texas is going to make a lot of good changes. I think they're just going to make minor tweaks. What I'm telling every single family right now is plan on supporting your son or your daughter through the special needs trusts and through base Medicaid, SSI, RSDI, and Medicare. Count on those benefits. What HCS gives us should be icing on the cake. What class gives us should be icing on a cake, but it shouldn't be something that you absolutely depend on long term. This bill really kind of shook the community in a way of saying, whoa, what we thought hasn't changed since 1985 is now being changed right now. And so it's really, really important. But for now, just be thankful that you live in Texas because you're not going to have as hard of conversations as other folks are having in the next 6 months or so. So it's really, really important here. This is what mentally, if you think of the OBB, what states are doing is they either have to change the funding at the state level or they have to cut Medicaid services. Right? That is the seesaw effect that every single representative is going through right now. More information is coming out by the day, like literally by the day. We're finding out new things. We're going to workshops and webinars from lobbyists and people who drafted the bill, saying, okay, how does this shake out in a real world situation? Um, United Way, other organizations that have done OBBB workshops 3 months ago, they're different than they are today. I would say if you are to be a better advocate for your young adult outside of, doing some of the steps that we talked about today, is just monitor this situation. Don't panic. Don't run around, causing a big storm. Just be patient and monitor what happens. Like I said, Medicaid's not going away. The waivers aren't going away. They're just going to be modified. They're going to be tweaked. And that's what we're just preparing ourselves for. So any questions on that? I think we're coming up at noon, so we got some time for some questions.
Yeah, I'm not seeing any here in the chat, but a wealth of information, of course, and I think we're all just kind of processing.
Yeah, there's a lot, and it's not basic steps. There's a lot of information there. The biggest ones are just start having conversations. Depending on like what I'll say is, if your child's 12 years old, do not stress about guardianship. You're so far from that. Focus on getting the special needs trust in place. Focus on how to fund the special needs trust. Focus on the next in line caretaker and those types of things. Don't worry about.
Sorry to interrupt, but what about the people who work part-time and collect SSI? And what's the limit on how much you can make or how many hours you can work with? And then you make sure you don't get cut off from the stuff like that, the SSI and everything else.
Amy, do you want to take that from a calculation standpoint?
So your benefit, are you receiving the full benefit of the 967?
Well, I work part-time myself, that entry for Blue Sprig. And I'm on the HCS program, Home Community Supports, so that's the thing for me. I do like work part-time, 3 days a week, 3 days a week, and I get like 13 something an hour wise from them. And
And what we could do is I could do a calculation for you and we can look at that just to make sure that you stay under the
yeah,
threshold.
which I have been for years. I'm just trying to figure out what the max is and without
Right.
getting cut off, kind of thing. Like
And
how
one
much
of
I can
the
make per hour. Because I know there's like some people out there who, like me, who work part time and they're afraid of getting a raise because they might get cut off or whatever.
right.
The
Mhm.
employers are out. How many they have to scale back their hours or not take a pay increase, kind of thing.
Right. And that's just one way of us that we can look at it and give
Mhm.
you so we can get the details.
Yeah. I know that we'll be sharing the contact information both for Brian, Yami, and then also Amy. So when you are when the presentation is concluded, I'll get all the not only the presentation information, the video that was that we had today, but we'll get that to you all as
Yeah, and also
registered.
I also do get. I think it's SSDI I get because I get both Medicaid and Medicare.
Mhm.
Mhm. So yeah, I've been on program for quite some time because I was waiting for 14 years before I got approved for HCS. I know I've been talking to families out there from my line of work, and I've been hearing 20 nowadays from some families, and so work for a company that does ABA therapy for autism. And I know recently, this past year or so, the Hanley Law Firm bill, which I think that's going to help in the long run for a lot of these people not knowing about the resources, was approved in the statewide. So the school districts provide us that information wise, which
Right.
so
Yeah.
it takes a load off of me in a way too on that, telling them families out there because the work I do entry, we got families that work with and behavioral motor skills with as ABA wise, and I tell them some of them like get on the wait list on this for as soon as possible.
It's the most important thing you can do today is get on that wait list.
Yes.
Yeah.
Well, thank you for sharing that, Justin. We'll get the information. So it sounds like it might be a good pairing, one-on-one for you to talk with Amy offline. She can get those questions answered.
All right.
Are there any other questions in general for Brian, Yami, or Amy?
Back to that list, the Medicaid waiver list, who should we email someone or?
Yeah, we have a one pager. Let me see if I can share my screen real quick, and if you email us, I'll send it to you.
Let me turn my.
Do you have it readily available, Yami?
Yes,
There.
and I'm sure. There you go.
So this is like an old list, but this is one that even my mom used when she was a sped teacher in Aldine. So HCS and Texas Home Living is the top two programs. The blanket recommendation for us is always, we call it the big three, or like the three main ones: HCS, Texas Home Living, and then CLASS, which is CLASS. That's the first one down there. MDCP is for medically fragile children that are 0 to 20 years old. Deaf, blind, multiple disabilities is not deaf or blind with multiple disabilities. It is deaf and blind multiple disabilities. So not every single person is going to qualify. Those three are the big ones. If you feel like your child could potentially qualify for the other ones, put them on the list. You do not have to have a diagnosis to go on the list. You do not have to go through an evaluation to get on the list. You're just saying, hey, name, date of birth, address, phone number, I'm interested. When their name gets called in the future, they will go through the evaluation. You'll get, awarded whatever. That's when you make your decision. Put them on the three list. Exactly what Justin's saying. Carrie, myself, Amy, please, that's the most important thing you can do this weekend. HCS and Texas Home Living depends on what county you live in.
Mm-hmm.
Okay. If you move counties, please update with the new provider in that county, agency in that county. You move from Harris County out to Fort Bend, please make sure you let Texana know, hey, by the way, I'm making a switch here. It's very important. And then you'll start getting these really sad letters every year saying your kid's now, number 86,500, whatever. But it's a process, right? You're going to slowly move up that list. And I'll tell you, it is one of the most important things long term. What it looks like in the future, who knows? But right now, we know it's going to be there in some form or the fashion. Okay.
Thank you.
Yeah.
No other questions. We'll wrap up. And then if you guys have specific questions to your situation, RSDI and SSDI, what's the work income threshold for certain things? Because we can get pretty granular on, impairment related work expenses, offsetting reportable income to Social Security. There's a lot of cool things you can do. Just reach out to us, and we'll go from there, and we'll answer whatever we can there.
Well, thank you all so much for your time and expertise on this. I know there'll be lots more questions to come.
Awesome. Thank you so much, Gary. Appreciate it.